All right, Bulls and Bears, thank you for coming back to this channel. We got a lot of economic financial news to get caught up on, as always. A ton of stuff going on here, a ton of numbers to go over, uh, a ton of deceptive headlines to talk about here, and we're going to talk about the economic growth, which is people taking on debt and government spending for the most part. We'll talk about that here in a few moments. We also have some updates today on housing and other information that is just going to, I think, blow the mind, boggle the mind, maybe a little bit of both. Well, let's go ahead and get started. Please make sure that you are subscribed. Keep this channel alive so we can help get the word out here about what's really happening here to most people in this economy. We've got the central bank out there, the career politicians, the money printers. Ever since we came off the gold standard in 1971, we've had these people that have been on basically the gravy train of fiat currency. We're talking about the lawmakers, the politicians getting wealthy off of this system. So, of course, they don't want this to end, right? Because most of them are in the top 10%, and we know how well the top 10% are doing, right? And it's a lot of these elites, they call themselves politicians that are actually in the top 10%. And we know that the top 10% owns about 90% of all stocks. We know that the wealth transfer, the wealth divide is getting worse and worse all the time. In fact, there's some recent news out about this. Take a look at this. This is staggering, folks. This is mind-blowing. World's richest 1% gained 40 trillion. That's trillion with a T in a decade. $40 trillion in a decade, right? Are they that smart? Are they great investors? Or do they just happen to be in the right place, right? Isn't it interesting that nobody really sees what's going on here? This wealth transfer is massive. Even the people that went out and spent their stimulus checks a few years ago, what, 4 years ago now? Some in 2021, 3 years ago. Most of that went to the top 10%. They spent it at car dealerships, right? Giving it to big companies. That's where we're at right now. The more credit is issued to people, credit cards, etc., the richer the wealthy get because it mostly goes to the top, right? You're going to go shop at Walmart, you're going to go shop at Target, and this is mostly global companies, right? Let's go over and go over this though. U.S. economy grew, quote unquote, grew 2.8%. Real gross domestic product increased at 2.8%, annualized pace in the second quarter, above 2.1% that was forecast. Hurrah, hurrah. People are going to be celebrating that. Economists are going to be saying this is great, better than forecast. How's about this? How's about they just put the forecast low so the number comes in higher than expected no matter what? Also, a lot of this is consumer spending and government spending. Economic activity in the U.S. was considerably stronger than expected. Now, let me just pause right there. As soon as they stop the credit card limits from increasing, this growth is gone, folks. It's done. This economy is done. It's run off of 100% borrowed money right now. People's savings and their savings accounts are being drained. Their 401ks, they're pulling money out of their 401k. In fact, if you watched our report last week, we talked about how they had to pass a new requirement to where 401k providers allow people to pull out more money because so many people were pulling out and getting these big tax penalties. Boosted by a strong consumer, this is what it says here out of CNBC. Government spending, now first of all, strong consumer. Okay, the consumer is only able to purchase right now, most people, like 70%, only able to purchase things right now, only able to go shopping, out the restaurants, etc., even able to travel, only able to do all these things because of credit, mostly going on credit cards, folks. Government spending, that's another one. Those are the top two. Spending in a sizable inventory build. Folks, this is a sham right here, folks. The GDP, the economic growth, what they're talking about, it's purely debt-based, folks. That's why it's so important that they can't go back to sound money because all these numbers, they plunge. Just like the price of everything will plunge if they go back to sound money. Of course, that's why they don't want sound money. They don't want a dollar that has any sort of limitations. They don't want it to be limited by how much gold you have in reserves, right? That would be a gold standard. They want to be able to just click a mouse, create trillions of dollars, send it to their friends, send it to foreign nations all over the world, fund wars and conflicts, use it to fund all these different bills that a bunch of insiders, again, get rich from this, right? So the same people allowing this are the same people, a lot of them getting rich from it. All right, let's move on though. I think most of you probably know the game, how it works. Some of you may not though, so I always have to kind of revisit that here. So if you just heard me read that CNBC article quoting how strong the consumer is, let's jump from that. Remember the strong consumer. Let's jump to that, from that over to this here. Concerns rise over growing vehicle repossessions and mortgage defaults. Wait, they just got done telling us that the consumer was strong and that the economy was resilient, right? So which one is it? The cost of the cars we drive, apartments we rent, and the homes we're uh, are going up. It's causing an upward trend in car repossessions and defaults. Well, I don't think, and I'm reading this out of Click on Detroit. I don't think they know the latest numbers. Actually, rents. If you look at the most recent numbers, rents are falling. But yes, over the past 4 years, 3 to 4 years, they're correct. Rents have been skyrocketing and way beyond what people can afford. And that's why you see so many people taking money out of their 401k, running up more debt. Look at this here. Speaking of the cost of living and people not able to afford this, $1 million starter home, that's the norm now in 237 cities. $1 million starter home. The number of cities where a starter home is worth $1 million has grown from 84 5 years ago to 237 cities. I know places here in San Diego County, cities that I wouldn't want to live in, but yet the median home price, and I'm not saying I'm the be all end all of determining good areas, but some of these areas, if you've seen them, you probably wouldn't want to walk there after dark. And yet the homes are still selling for $700, $750, $800,000. It's truly amazing. This housing bubble, so much bigger, so much more dangerous than the previous housing bubble. But the difference now, like I often have to remind people, the difference now is that banks have been guaranteed life support, endless life support, right? Of course, they'll let the smaller regional banks fail, but the big banks that control most of the monopoly banks, most of them will not be allowed to fail. And in fact, they may grow bigger because they're going to buy up some of these smaller banks when they fail, right? That's the game, how it's played, folks. Let's move on here because a couple other things I wanted to get into today. And here's something we just talked about. And this is a symptom, folks. This is a symptom and a sign of people not having much money in savings and draining their savings accounts. Again, why would people be pulling at record numbers from their 401k? Last year was a record. This year, on pace to set another record here, almost 7 months into the year. What's happening, though, when people don't have much money in savings? Well, they have to, some of them move in with mom and dad. They have to negotiate lower rents. Rent prices continue to decrease, but remain elevated. June's drop in rent prices marks the 11th straight month of decreases. However, prices are still elevated from pre-pandemic levels. Yes, that's true. But folks, this is a sign, folks. Declining rents for 11 months in a row, year over year. And this is with millions of refugees and migrants coming to the country, filling up a lot of hotels. And from what I read, even filling up some apartments somewhere. Rent prices continue to drop, according to the latest data from Realtor.com. So, folks, again, strong consumer. Why are rents dropping? Because people are either tapped out or on their way to being tapped out. But what's likely to evolve from this? Well, it's going to give the Fed more incentive to cut rates. Rents are finally cooling off, bolstering the Fed's case for cutting interest rates. With home unaffordability at all-time highs, talking about cutting interest rates, folks, this doesn't make any sense. This is beyond psycho type of stuff here. And folks, you want to hear something else that may blow the mind, boggle the mind? Look at this. Interest payments on U.S. national debt will shatter $1.14 trillion this year. And that's going to eat up 76% of all income taxes. So pretty soon, all the income taxes that Americans collectively are paying in is just going to go to pay the interest, just the interest, not even touching the principal. So how do they expect to ever pay this off? They can't raise taxes. People are already tapped out, right? They can't try to pull more money from people. They just don't have it. They're already borrowing money just to do what they're doing now, right? Again, a lot of the shopping centers would be empty, the theaters, the stadiums, if people didn't have more debt to go into. And how is this possible? It all goes back to fiat money, the fake funny money, right? And the banks loaning out money that they actually don't have. Now, somebody in our last report here, maybe 2 reports ago, said that I don't think banks are insolvent. I didn't say banks are not insolvent. Banks are insolvent, right? They're loaning out money they don't have. All of them are insolvent. What I said was just because they're insolvent doesn't mean they're going to be allowed to fail, right? When you have, again, unlimited money creation, you have the Fed. There's no limit on the money, folks. Some people still don't understand it, that there's no limit on the amount of money that they can create. Now, in order for something to drastically change, we need something massive to come in and pull the plug on this money printer, right? Will the Fed get hacked? We've been seeing a lot of hacks, a lot of outages. Will their whole system get compromised? And then all of a sudden, that money that they were using to fund all these different things and fund into the banks or funnel into the banks, all that just stops. You imagine a black swan event like that where the money creation just stops, right? The Fed can no longer come in and buy up everything. You would see a massive crash. It would be 2008 times 100, maybe even times 1,000. It would be so. It would be such a massive, drastic drop. It would even be scary for people like me that, would expect something like that if the money were to get shut off. Probably many of you as well. People are cutting cable too. Another sign of people getting tapped out. You have to cut the wants out, because if you can't even afford what you need, you have to cut out the stuff that you want, right? So you have to get rid of the stuff you want. Comcast Cable just lost another 419,000 pay TV subscribers. So the cable cutting is continuing, cord cutting as they're calling it. But it decelerated a bit in the second quarter. So second quarter numbers are out 419,000 in the second quarter. That was 11, almost 12% of its customer base from the prior year. Let's see, last year, second quarter 2023, they had lost 543,000. Well, yeah, the number is likely smaller because there's less subscribers to cut off the cable. So next year it might be slower, but they're still losing customers total. Just because it's slowing doesn't mean it's not getting worse, right? So what are these cable companies going to have to do? They're going to have to stop raising these rates because people only have so much money. Yes, they can swipe the card and borrow money, but there's just not enough borrowing at some point, especially when your savings is dropped and plunging, right? So what do you guys think about all this? Please let me know down in comments. The economic growth, the 2.8%, the 200 and something cities with $1 million starting home price. Folks, that's insane. You can live in a crime-ridden area and still have to pay close to $1 million for a home. That's nuts. In California, I can show you plenty of cities like that. What else did we talk about today here? Top 1% gaining $40 trillion over 10 years. Folks, it's insane. Where does it end? As long as the money printer keeps going, this is scary. It may not end, but black swan's out there, and I think it's coming sooner than most people think. I think it's coming before the end of this year. What do you think about that? Please let me know. Something big's on the horizon, folks. Get ready. Keep stacking as always. Bye for now. Peace.